Hi, I'm Natalie MacDonald. The Bank of Japan has made the anticipated move today of setting a 2% inflation target, also stating that it will initiate an open-ended asset purchase programme in order to achieve this bold fiscal goal. Tony Morris of ANZ is on the phone with me now. Tony, a lot has been made of the public pressure placed on the central bank to take aggressive monetary action. How much, therefore, do you think today's decision is the central bank acting independently, or has this been a coerced move?
Well, I think it's notable for the joint press conference after this meeting where you had the finance minister and the economics minister. You also had comments from the new prime minister. Now, the government clearly has a mandate to try and address some of these longer-term structural issues in the Japanese economy, and they've determined these moves today as being very, very bold steps for policy. Now, there was some notable dissent at this meeting. The vote for this 2% inflation target, there were two dissenters there. I suppose you put it in the context that there clearly has been some political pressure, for want of a better word. I think coercion was going a little bit too far. But fundamentals in Japan have changed. They're clearly slipping into a new recession. Some of the trade frictions with China had seen their manufacturing sector come under a little bit of pressure. And there was a clear, I suppose, determination on the incoming government to do something a bit more bold to take monetary policy to a new step. I also think it's interesting that they decided not to move the short-term interest rate being held at 0 to 0.1%. There has been some press speculation that there might be some discussion around that. But I suppose in a way they've delivered on what the market was expecting. A lot of the moves on markets happened before today, even though there was a little bit of volatility afterwards. And now the focus shifts to the next phase of this political cycle.
If we concentrate on the asset purchase plan for a moment, yen traders will be watching to see just how far the central bank is likely to shift away from the purchase of Japanese government bonds. We know that 2 trillion yen of the 13 trillion yen of asset purchases each month is likely to be in JGBs. But what of the rest?
Yeah, it's interesting to see the reaction of the JGB market to this. So there was actually a rally in the JGB markets for 10-year JGB yields actually fell on the day on the announcement that 2 trillion of this new plan is going to go into the JGB market. The rest is going to be in T-bills. So this seems to us that this is very much determined to be a liquidity measure. I suppose you could say there's a real contrast here with the U.S. quantitative easing. If you think of U.S. the so-called twist, selling short-dated bonds to buy longer-dated bonds to keep longer-dated bond yields lower to help the housing recovery. It seems to be the other way around in Japan, even though they've adopted some clearer communication policy, which is very much an echo of what the Federal Reserve is doing. There's going to be a lot of maturing T-bills over the course of this year. I suppose in regards to the actual way they're going to get to this 2% target, this is where there might have been a little bit of disappointment today, just using short-term liquidity purposes, and if anything, on top of the fiscal expansion this year, there could probably be a slight step down in terms of quantitative easing into next year. So maybe one way to read the reaction in the JGB market today is you could perhaps say that there's a lack of confidence that they're going to be able to generate inflation going forward, but they're also taking on board the fact that the Bank of Japan will be buying JGBs. And if you think that there's going to be a fiscal expansion in Japan this year, you could make the argument that the Bank of Japan is helping to finance that fiscal expansion overall. So whilst they've got this 2% target, they have not come up with a time frame around that. They say the earliest possible time. So I imagine that we're going to be looking at extended QE going, at least for a couple more years, if not longer, on the back of this.
The Abe government is expected to nominate a Bank of Japan governor sympathetic to Mr. Abe's monetary goals, when the term of the current governor, Masaki Shirakawa, ends this spring. We've touched on central bank independence slightly already. Is Mr. Abe simply acting within his jurisdiction, or is this another case of Abenomics that we have seen increasing examples of since coming into office?
Well, I think what's been interesting here is that clearly a lot of the ideas here that Japan needs a different and more aggressive approach on monetary and fiscal policy to try and change some dynamics. A lot of the ideas here have clearly been ruminating even prior to Mr. Abe's election victory. I think it comes with a great deal of political determination to deliver a change in dynamic, a so-called regime change, which they've mentioned in the press conference today. So I think this appointment of a new governor in April is going to be very important. The advice that the incoming government has been getting, very much in line with some of the advice coming out of the US in terms of changing this inflation dynamic. So I think this incoming governor is going to be very, very important. I suppose I'll be economics is an interesting way of putting it. I think from what you've seen in the way that the Japanese yen and the stock market has responded since Mr. Abe came to power, I think there's a feeling that these policies are overdue and are going to be very positive. I guess it depends on what happens from here. If you see that dollar yen's gone up to 90, there's been talk as well that they might need some further weakness of the Japanese yen. So when the incoming new governor comes in April, we'll see just how aggressive and determined they are to use these new policy measures to get that higher level of GDP and a rise in inflation expectations over time.
Following the announcement, the Japanese yen initially fell to levels approaching a 2.5-year low against the US dollar, but has since recovered. The yen is now trading up against most major currencies, precisely the opposite of what Japanese policymakers wish to achieve, with a lower yen desired to boost exports. With a lot of attention expected to remain on Japan over the coming months, how do you see the yen responding?
Yes, I think there was maybe some profit taking today, buying the rumour, selling the fact. We've seen the yen recover some ground on some key crosses. It's been very interesting to see that some of the previous other safe haven currencies, Norwegian kroner, for example, even the Australian dollar, Singapore dollar as well, have been losing a little bit of ground with this so-called risk-on move. There's been some speculation and some comments from economic advisors, Hamada too, where they're trying to go with this sort of policy, that numbers around 95 yen or even 100 are feasible in this environment, but anything above that might be getting a little bit excessive. So I have the sense that as we look towards the April appointment of the new governor, that the yen will remain under pressure. I think it's going to be interesting now how there's some political reaction to what is actually a very, very sharp period of devaluation. If you think since last June, the Korean won has appreciated against the Japanese yen by almost 30%. So that's a very, very big move in a relatively short period of time. So it's going to be very interesting to see what this incoming governor does to make sure that the Bank of Japan moves along in meeting this new inflation target.
Tony, thanks very much. Stay tuned to Dukascopy TV for our latest Commodities Corner interview. Monica Gibson will be taking a look at agricultural commodities. But from me, it's goodbye for now.